Welcome back, everyone, and thank you for joining me again here on the podcast. It's time for another crypto roundup, and this one comes at a pivotal moment. The Federal Reserve has just cut interest rates by 25 basis points. On the surface, that might sound like good news for markets. After all, lower rates usually mean easier money, and easier money usually means risk assets rally. But what actually happened caught a lot of people off guard. Instead of rallying, Bitcoin, Ethereum, Solana, XRP, and most of the major altcoins all took a hit. Charts turned red, liquidations piled up, and crypto stocks slumped right alongside the coins they're tied to. Before we dive into why, let's ground ourselves with the top 10 coins by market cap, excluding stablecoins, and see exactly where things stand right now. Bitcoin is trading at around $112,900, down about 2 to 3% in the last 24 hours. Ethereum sits near $4,180, sliding almost 7% on the day. XRP is at roughly $2.82, losing about 5%. Binance Coin holds around $995, down about 3%. Solana trades near $224, down close to 7%. Dogecoin is at $0.246, dropping around 3%. Cardano is sitting near $0.86, off by about 4%. Tron holds steady at $0.331, with just a small 1% dip. Chainlink trades at $22.70, down roughly 4%. Avalanche is at $32.10, down about 5%. So across the board, we're looking at weakness. Bitcoin's dip was relatively mild, but Ethereum, Solana, and other altcoins got hit harder. That sets the stage for everything else we'll cover today, from the Fed's decision to the wave of liquidations and the broader market reaction. Now, let's break down the Fed's move and why crypto sold off instead of rallying. So today, we're going to unpack this market reaction. We'll dig into why Bitcoin fell even after what should have been a dovish Fed move. We'll look at the billions in liquidations across derivatives markets. We'll talk about the pain in crypto-linked equities like Coinbase and Marathon. We'll look at the bigger picture, including a brand new joint task force between the UK and the US to coordinate on crypto regulation. And finally, we'll talk about what all this means for the road ahead. Whether we're looking at just a temporary shakeout or something deeper. Let's start with the headline. The Fed cut rates by 1/4 percentage point. This was widely expected. Traders had been pricing in a cut for weeks. Inflation is cooling but not gone. Growth is slowing. And the Fed was under pressure to ease slightly. The actual cut was not a surprise. But here's the thing. Markets don't move on what's expected. They move on what's new. And what was new was the Fed's tone. Jerome Powell and the Fed made it clear that while they cut, they're still worried about inflation, still cautious about growth, and not ready to promise a string of cuts. That caution was enough to spook traders, who had been hoping for a more aggressive pivot. Bitcoin reacted quickly. Instead of surging higher, it dropped 2 to 3%, sliding under $113,000. Ethereum fell harder, losing nearly 7%. Solana was down 6 to 7%. XRP dropped 4 to 5%. The red spread fast across the market. And because so many traders had piled into long positions ahead of the Fed decision, hoping to ride a dovish wave higher, the sell-off triggered a wave of liquidations. More than $1.5 billion was wiped out in a matter of hours, most of it longs being forced to close. That's the thing about crypto derivatives. They amplify everything. When the market leans too far in one direction, even a small move the other way can trigger a cascade. That's what we saw here. Traders were positioned for upside. They didn't get it. And the leverage unwound violently. Crypto stocks felt it too. Shares of Coinbase Marathon and other publicly traded crypto companies slipped in pre-market and regular trading. These companies are tied to crypto's fate. When Bitcoin falls, their revenues and valuations come under pressure. It doesn't matter if Coinbase has a good quarter or Marathon mines more efficiently. If the underlying asset drops, the stocks follow. Now you might be wondering, why didn't crypto rally on the rate cut? Isn't that what usually happens? The answer is that markets are forward-looking. The cut was already priced in. Traders weren't waiting for the cut itself. They were waiting for confirmation of a more dovish path ahead. When they didn't get it, they sold. It's the classic case of buy the rumor, sell the news. And in this case, it was buy the rumor of rate cuts, sell the reality of just one cautious cut. Another layer to this story is that even though the Fed cut, inflation hasn't fully gone away. That means real yields are still relatively high. For Bitcoin to really shine as digital gold, it needs either inflation fears to explode or real yields to collapse. Right now, we're in a middle ground. Inflation is sticky, but not out of control. Yields are high, but not rising. That keeps Bitcoin stuck in a tug of war between its risk asset behavior and its hedge narrative. Let's shift gears for a moment to regulation. On the same day as all this market drama, the UK and the US announced they're forming a joint task force for capital markets cooperation. The Transatlantic Task Force for Markets of the Future is aimed at smoothing regulatory barriers and coordinating more closely on things like digital assets. This is important. Crypto is a global market, but regulation has been fragmented. The US has one approach, the UK has another. Europe has its own framework. Asia has its own mix of policies. A joint task force between Washington and London could set the tone for more harmonized rules, or at least a clearer path for companies that want to operate on both sides of the Atlantic. They plan to publish a report in about 180 days, which could give us more concrete ideas on where this is headed. So we've got a Fed that cut rates but stayed cautious, a market that sold off instead of rallying, liquidations that flushed out over $1 billion in leverage, crypto stocks that bled in sympathy, and regulators in the US and UK trying to find common ground. What do we do with all of that? First, recognize that this pullback doesn't mean the bull market is dead. Corrections happen. In fact, corrections are healthy. They shake out leverage, reset sentiment, and create space for the next leg higher. But it does mean we're in a fragile environment. Traders are nervous. Every data point on inflation, every comment from the Fed, every signal from the economy is being scrutinized. The days of easy rallies are on pause for now. Second, watch the levels. For Bitcoin, support around 112 to 113,000 is key. If that holds, this could just be a short-term flush. If it breaks, we could see deeper downside before buyers step in. For Ethereum, the 4,200 level is critical. Solana needs to hold above 220. XRP needs to defend the $2.80 zone. These technical levels matter because they're where traders have stop losses and where algorithms trigger. Break them, and volatility spikes. Third, keep an eye on the derivatives market. Funding rates, open interest, and liquidation levels tell us how crowded the trade is. When everyone is leaning one way, the market loves to punish them. Right now, the bias was long, and those longs just got wrecked. If the market resets and funding turns neutral, that's a healthier base for the next move. Fourth, watch the crypto stocks. They're a proxy for institutional sentiment. If Coinbase and Marathon recover quickly, it suggests institutions are still confident. If they keep sliding, it means risk appetite is fading. Finally, pay attention to regulation. The UK-US task force may not move markets today, but it's laying the groundwork for the next chapter of crypto adoption. If they can harmonize rules, it could unlock more cross-border capital. If they clash, it could create new headaches. Either way, it matters. So where does that leave us? The Fed just reminded everyone that monetary policy still rules the game. Bitcoin may be decentralized, but it isn't immune to the cost of money. Traders learned that lesson again this week. The question now is whether this pullback is just a bump in the road or the start of something bigger. If you're a long-term believer in Bitcoin, nothing about this week changes the fundamentals. The supply is still capped. The ETFs are still pulling in flows. Adoption is still growing. If you're a short-term trader, you need to respect the volatility and position carefully. Either way, the message is clear. Don't fight the Fed, even in crypto. That's the Roundup for today. Drop your thoughts in the comments. Do you think the Fed's cut will spark a new rally? Or was this just the first domino in a bigger correction? Smash like if you're bullish. Follow for tomorrow's update. And as always, protect your crypto, secure your holdings with a ledger using the link in the description, and we will see you at the top.